Internal Revenue Service IRS tax news. Employers can withhold make payments of deferred Social Security taxes from 2020. IR 2021-17, January 19th, 2021, Washington. The Internal Revenue Service today released Notice 2021-11, there's a link to that notice here, addressing how employers who elected to defer certain employees' taxes can withhold and pay the deferred taxes throughout 2021 instead of just the first 4 months of the year. In response to the presidential memorandum signed August 8, 2020, Notice 2020-65 was issued on August 28, 2020, giving employers the option to defer certain employees' Social Security taxes from September 1st, 2020 to December 31st, 2020. This applied to employees paid less than $4,000 every 2 weeks or an equivalent amount for other pay periods, with each pay period considered separately. The taxes, which are technically called old age, survivors and disability insurance, or otherwise known as OASDI, are calculated at 6.2% of the employee's wages. So obviously we're talking about some of the employee taxes, the payroll taxes, in essence, quote, payroll taxes, end quote, that being in essence the Social Security portion of it. We have Social Security and Medicare, typically the Social Security for the employee's side of it that we actually would withhold from the employee's wages, generally taking it out of the employee's wages and then having to pay it to the government, being at that 6.2%. And then there's that matching component for the employer side, being the 6.2% on the employer side generally as well. Back to the text. Any taxes deferred under Notice 2020-65 were withheld and paid ratably from employee wages between January 1st, 2021 until April 30th, 2021. However, the Consolidated Appropriations Act 2021, signed into law December 27th, extended the period that the deferred taxes were withheld and paid ratably. The period is now for the entire year from January 1st, 2021 through December 31st, 2021. So they're basically extending the period that you got to basically pay those items. So when they thought about the relief that they might be able to provide to the employers, what will typically happen is you withhold from the employees and you got the payroll taxes that you then have to pay. And that money is money that you could basically have in your hands at that point in time. So the plan was, of course, to hold on to that money for a longer period of time, or possibly apply a credit against it, or plans like that. And now they're basically extending the time period with which you have to pay the withholdings. So remember, the withholdings that are taken out of the employee wages are actually, of course, the employee's money that you're then paying to the IRS basically on the employee's behalf. And now the thought is, the idea being, how long does it take, or when do you have to actually pay those items back to the IRS on behalf of the employees? So Notice 2021-11, make changes to Notice 2020-65 to reflect these extended period. Payments made by January 3rd, 2022 will be considered timely because December 31st, 2021 is a legal holiday. Penalties, interest, and additions to tax will now start to apply on January 1st, 2022 for any unpaid balances. Employees can see their deferred taxes being collected immediately. Employees should check with the organization's payroll point to contact on what their collection schedule will be. Additional tax relief related to the COVID-19 pandemic can be found on irs.gov, irs.gov, the IRS website.